I'm Matthew McNamara, Head of National Sales with HSBC Equipment Finance, and we're the asset-backed lending division of HSBC here in the UK. Equipment Finance is HSBC's asset-backed lending division, and what HSBC Equipment Finance does is offer the customer an additional credit line and therefore additional cash flow solution to their needs, based upon four principal products really: instalment credit, which is hire purchase, leasing, operating leasing, and additionally a commercial loan. Real benefit of employing equipment finance, I would say, is cash flow based. Capital expenditure within SMEs and MMEs that we deal with can be quite extensive and can put a drain on that business's cash flow. So what we do is provide an additional credit line and therefore free up the ability to spend that money if they need to do on other things. HSBC Equipment Finance can offer a number of products. Initially instalment credit, which to you and I would know as hire purchase. Additionally, we can provide finance leases, operating lease and a generic commercial loan. In HSBC Equipment Finance quest to meet all customers' needs, we've actually specialised in certain sectors within the UK. Those being, we have a specialist vendor division which has relationships with third-party manufacturers. We have a specialist commercial vehicle division which deals with trucks and trailers, buses and coaches. Importantly, we've recently gone into the marine market and we have a specialist marine sector, and also for the big ticket type assets we've got a specialist structured asset finance team. They look at the more complex top-end big ticket deals. There'll be many circumstances in which a customer might want to come and see us. Essentially, we're there to meet the needs of their capital expenditure. So if a business is expanding or looking to replace old machinery, they can look to use instalment credit, as I've said, or finance lease as a solution, rather than spending those monies out of cash flow. One of the great advantages of HSBC Equipment Finance is that it can aid budgeting, in that customers can actually sit down and decide what their capital outlay is going to be. We can predict what that capital outlay is going to be over a period of time, and therefore can actually aid their budgeting. When businesses make significant capital expenditure, they will incur quite significant VAT payments. What HSBC Equipment Finance can do can defer the payment of that VAT, so it can actually mirror their VAT return. So instead of making a large outlay at the start of the quarter, we can actually delay it so that payment is made at the end of the quarter, so it's money in, money out. This frees up the overdraft, which can be spent on other things. I think equipment finance as a finance solution varies in terms of its level of understanding. Some people in the more traditional industry perhaps, which have heavy capital expenditure, will be familiar with instalment credit, i.e. hire purchase, as a funding solution. What often happens, and is sometimes difficult to unravel, is that a customer will make a major capital spend using, say, the overdraft, the perception being that they're paying cash, and then the following day they'll need to make some additional greater expenditure and realise that they've tied all the cash up. By initially thinking about using equipment finance, they're going to free up those extra credit lines. All businesses are unique, and that's the way that we treat them. The way that we do that is actually to tailor our packages to their own particular needs. So for example, if you have a business that has seasonal payments, for example a fairground ride, cash will be coming in the summer, there'll be no cash coming in the winter, so therefore we can tailor the pattern of their repayments to meet that. Likewise, a farmer, his cash will start coming in late after harvest. During the winter months there's no cash coming in. Again, we tailor those repayments to meet those needs. We can also reflect the fact that the customer's aspirations in terms of what rates are going to do, so we can look at offering fixed and variable rate solutions or a combination of the both. We can also offer the opportunity, if a customer believes rates are nearing the bottom where they think they are, they can lock those rates in at that particular rate. And a good thing about HSBC Equipment Finance is that often we don't want to take any additional security. We take our security in the actual asset itself. HSBC Equipment Finance can be contacted via a variety of routes. We can be contacted via the internet, we can be contacted via our direct sales force, which is based here in Birmingham, or out in the network. But primarily I would think that the customers can come through the branch network. Through the commercial manager, we have direct contacts with those individuals within Equipment Finance, and we work very closely with those teams.